Hello, I'm Greg Bonnell. Welcome to TD Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis and investment insights to help boost your trading potential. Got a great show coming up for you. We're breaking down all that market action after the sell-off yesterday that saw the NASDAQ log its steepest drop since 2022. This, of course, all amid recession concerns south of the border and a lot of policy uncertainty. Plus, the U.S. dollar index is hovering near multi-month lows ahead of some key inflation data that could shape the Fed's next move. And don't miss our bull versus bear debate on U.S. steel. Our trader debaters are standing by. Are tariffs going to drive growth for the name, or will global headwinds weigh on profits? That's all ahead. You're watching TD Active Trader Live. Let's check in on the markets. Investors looking for a little calm after yesterday's sell-off. The S&P 500 is down about 8% from recent highs. The NASDAQ has fully corrected. We got those recession fears in the United States brought on by just uncertain trade policy. As we check in on the S&P 500, you can see here's yesterday's action, a bit of a bounce before we hit the closing bells. And right now we're just a bit choppy. We're on either side of that break-even line. And so we'll see how things progress. But obviously, there's some jitters in the market right now. I want to check in on the heat map to see actually what is bouncing after yesterday's sell-off. Tech got hit pretty hard yesterday, so we're seeing a bit of movement in some of the big tech names. You got NVIDIA up a little shy of 3%, Broadcom up about 4%. And Tesla, somewhere hiding on this screen, it was showing a bit of there. It is over there. It's up 5%, pulled back 16% yesterday, so a bit of a bounce off of those lows. Wanted to look at some individual names, including Delta Airlines. After the close yesterday, it was the first of the major U.S. airlines to come out and say, we're going to cut our first quarter forecast. We don't think this year is going to be as strong as we initially thought. This is a big change in the narrative from just in January when all the U.S. airlines were saying we see strong, robust demand continuing through. You start getting a cautious consumer. Also interesting too, Delta joined by American and Southwest. They're all sort of noting too that government travel is down. Perhaps not surprising considering what's happening in Washington. Pretty key part of the business for them as well. So we got some movement in this name today. It was a sell-off yesterday in the aftermarket, and it's come off some of those lows, but still under some pressure. Kohl's, I want to take you through this one as well. In its latest quarter, sales were down about 9%. It's an important holiday quarter, but that was still a beat of expectations. Expectations weren't that high, but the full year forecast missing expectations. Again, Kohl's says it's expecting a challenging year, economic uncertainty, a cautious consumer hitting the retailer today. And that's your market update. Joining us now for a more technical take on what is happening in the markets, and what a time for a technical take. Hiran Amin,
yes,
Jason Natick from our TD Direct Investing team. Hiran, take us through what you're seeing there. It was quite a day yesterday.
It was quite a day. Yeah, we're going to start with the triple Qs, of course, looking at the NASDAQ as what you alluded to, Greg. So they had probably the worst day since 2022, 4%, falling 4%, worst session. This is dating back to September 2022. A lot of the news was based on, President Donald Trump and Treasury Secretary Scott Bessent have, traders feeling a little bit hot under the collar. The former noted that the economy was going through a period of transition, and the latter said that it was going through some detox. This is all just fancy phrasing. Sounds like to me that what we're doing could lead to the big R word, the recession. So looking at the charts, let's pull this up right now. A lot of this is attributed to the Mag 7, of course, cohort. They usually account for nearly the entire downturn in the NASDAQ. I've got the weekly chart pulled up right now just to see where this long-term trend is holding up. It has buckled off of that. It's coming below what we have is the 50-week moving average now. And usually not, this, we might see maybe a little bounce off of this, but just to bring it down, let's go to the daily chart now over here, and we'll switch it up and see how things look. And so now what I've also noticed on the daily chart, there's a double top pattern that's formed, and this is usually a bearish one that's in the market. So we saw this double top there and a breakdown off of this move. And just showing our viewers, the measured move usually is just going to be from the top of that pattern right to the base of it. And that's looking approximately, we're looking at just below. We still got a little bit more pressure coming down over here where it could push another few more dollars if that move does end up actually being completed. It's still holding part of that longer term trend off of that base, but it'll be interesting to see if it does push down from over here. Biggest draggers on them was yesterday was MicroStrategy, exposure to Bitcoin, of course, and Tesla, roiling 17 and 15% respectively there. All right, so that's one to keep an eye out on. Next, let's pull up our US dollar index over here.
This is really interesting, right? After all that phenomenal US dollar strength that defied so many expectations, this graph is starting to tell a different story.
Yes, so what we saw was these highs just making at the sort of beginning of the year, peaked out to that 110 level. It's now near 4-month lows, right? We're currently sitting at that 103 level. It's hit this daily support range, which is kind of held up for a long time. It's even peaking down to this. This is kind of that key support area where it's going to hold off now, where we're going to see it. It got rejected off of this resistance back here at 107. If it could push and bounce, retrace, it could push up there. But right now with the backdrop, also there was some news on the euro. The euro saw a 4.6 rally against the greenback. Bond yields are surging out there amid speculation that they're building out large-scale, military infrastructure there. So we'll just keep an eye on the U.S. dollar. I mean, ultimately, this is a good sign. It means that if the U.S. dollar remains where it is, it just means that those exports are going to be a little bit more economical for those foreign markets there in the key area. So this is the key area to watch. If it breaks below this, we could see even for the push and test down to back to the 100 parity level there on that note. Final one we're going to look at is VIX.
Yeah, take me through some volatility.
Volatility is ticked up over here. So what I've got over here is a couple, just to look at the volatility first of all. We're at the highest level since December 2024. On the weekly, it's the highest close since February 2023. So we're definitely, we're definitely in a volatile era or period going through right now. One other thing that I wanted to also look at was just to compare. Remember, the VIX is just looking at the forward 30-day options on the S&P just to gauge the volatility. But there's also another VIX. The symbol is VIX3M, which I've got as a comparison, VIX3M. And that looks at the 3 months to just see where the term structure on volatility is. And right now it's inverted, where you have front volatility, of course, higher than the longer term volatility overall. So this is just one to keep an eye on to just see if this continues on. Obviously, fears front loaded at the moment. And if it does retrace down back, maybe a potential contrarian play, you'll see if VIX does come down, then that could push the equity markets up. So just an interesting one to keep an eye on and see how that plays through.
I like how here it has a VIX behind the VIX. If you'd asked me VIX3M, I would have said, I don't know, post-it notes, what's going on here? The man's got depth. Jason's got depth as well, too. What are you looking at?
All right, I'm looking at Dollar General. So Dollar General is, they're coming out with their earnings later this week on Thursday. Obviously a very large discount retailer, over 20,000 locations in the U.S., over 185,000 employees. Now, the earnings have been a bit of a mixed bag lately for them. They've seen their net sales up 4% year over year. Even they're seeing growth from a same store sales perspective. We're talking a range of like 1.1 to 1.4%, but that's not telling the whole story. They've been really impacted from an inflationary perspective, and they've been hit quite hard. It's a very competitive marketplace from not only the discount retailers, but other, big box stores, your Costco's, your Targets, your Walgreens really are competing in this space. So they're seeing some challenges. Let's pop into the chart to take a quick look. One thing that did really just jumped out to me when I was looking at kind of a longer term look at things were on earnings events. We've seen 3 significant gap downs over the last kind of like 18 months on this stock. The clear trend is downward, lower lows and lower highs over that time period. Things have stabilized a little bit. So just putting more of a near-term look at the chart, there's been in a kind of a steady downward channel, but recently, as of the last couple of weeks, there's been a breakout of that channel. The move looks to confirm with 2 green candles, but it looks to be a bit of a sell-off this morning. So investors are clearly taking a pause to hear what they've got to say on Thursday morning. So I'll be looking forward to that.
All right, guys, thanks for that. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. You can find more information about all our trading platforms under that Get Started tab, so you can find the one that is best suited for you. Whether you're a new or seasoned investor, TD Direct Investing has you covered. And once again, for the 3rd year in a row, Pro has been ranked as the #1 online brokerage in Canada by the Globe and Mail. It's time now for Trading Debating. The stock in the spotlight this week is U.S. Steel, an apt one considering we're expecting more tariffs on steel and aluminum. It's like we plan these things.
Yes.
Yeah, there's some thought that goes into the show. Before we get going with our debate, just a reminder to our viewers that the securities and strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it's important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. All right, let's get back to the stock of the hour, U.S. Steel. I'm going to ask you the question, what made you guys pick this stock to debate? I may have mowed your lawn there already, but
a lot of buzz around the world that something that everyone's already heard of at this point, which is tariffs. Specifically on steel and aluminum, there's news coming out which could come into effect tomorrow so far. This is a stock also I followed closely over the years, and they're going through a very public courtship right now from both Japanese and American suitors, and I'll have more to say on that in just a bit.
I don't doubt that you will, that's for sure. So yeah, same things, not to beat a dead horse, but tariffs, right? Yeah. So yes.
That's the name of the game these days. All right, let's get some time on the clock here. As always, you get 2.5 minutes each to present your cases, the bear and the bull, and there's some time to counter each other. We draw from a hat to try to figure out who's going to be who. So I think, let me see, what we got this week. We got Hiran taking the bull case. Kick things off for us.
All right, thank you. So U.S. Steel is a leading steel manufacturer, 5th largest in the world, in fact, substantial production capacity, diverse market reach, and they serve a diverse number of sectors: automotive, construction, energy, you name it. Here's the bullish case that I'm going to present for U.S. Steel based on a couple of factors. Let me start first with operational efficiencies and strategic investments. They're coming towards the end of their CapEx cycle. They just acquired this new mill, Big River Steel 2 facility, giving it more of a competitive edge. Now, why it's so good is because this is electric arc furnace. It's more of an efficient form of steel production. And so once they get that full up and running, not only should they increase their production, reduce their cost efficiency, become more cost efficient, I should say, but it's also good for the environment, lower carbon footprint with this type of technology. Second thing I'm going to talk about is rising steel prices. So we know that U.S. prices have been surging recently, of course, making more 20% more expensive than imported steel, and obviously tariffs are going to add to the mix. In fact, steel was trading at $700 a ton. Right now, pricing is somewhere about $1,000 per ton. This all just flows to the bottom line eventually for U.S. Steel. Final thing I'm going to mention is the acquisition target that I talked about. Nippon Steel, we know, has a $15 bid that was put out there for U.S. Steel. Of course, with humming and hawing, it's more of an investment right now versus an acquisition. But either way, that's also garnered the interest of Cleveland-Cliffs and Nucor as well to come into the mix. Either way, this cash injection is going to be vital for U.S. Steel to really open up new markets, but also new technologies as well as part of it. Let's jump into the charts here. What I've got to look at right now, I've got the chart pulled up. Just starting with the moving averages, we've seen it's in a green candle today, I'll say that, so we're on an uptick. They've been still holding in place, 21-day, 50-day, and 150-day. And if I just reveal what we're seeing over here, we've got this inverse head and shoulders also forming, which is a bullish pattern. Now, the right shoulder is still forming, and it's bounced right off of where my right shoulder pivot point is, so it's working nicely in his favor. So we should see a push up. Potentially, if it does get up to that sort of neckline, we should see a push up close to the $48. I'm going to ride on this, saying that we're going to definitely see some momentum with the tariffs news on the back end of this. And also, last thing, relative strength is also just coming off of that oversold category. It just sort of pivoted here. It's making a little bit of those higher lows on there. So this is all kind of pointing towards there's a bit of momentum building on this upswing on the price there.
All right. Sorry, I got distracted. Time.
What a great story you're telling.
Riveting stuff.
Well, like Greg just falling in love with Hiran all of a sudden. Actually, I got distracted because while you're talking about U.S. Steel, there's a story that's hit the wires saying the White House now saying 50% tariff on Canadian aluminum and steel coming tomorrow in response to the Ontario electricity levy. So I'm not trying to get I'm not trying to tip the scale. I'm not trying to tip the scale bear or bull, but just as you're talking about it, this news hit the wire. And I got distracted. So maybe I'll get distracted too while Jay's trying to make this argument.
It's topical.
Let's get the time on the clock, Mr. Bear.
All right, let's do this. So one interesting tidbit of information is when U.S. Steel hit the $50 high late in 2024, that's the highest the stock's been in almost 15 years. So if you had purchased a stock 10 years ago, you're selling at a loss if you're choosing to do that now. And that's not even talking about kind of the macro environment that's impacting the company as we even with the rosy picture that Hiran painted. We still have declining sales. We've got declining revenue growth. We've got slipping market share, uncertainty around the corporate structure. There's one thing that the markets like. They like certainty. They like to have their expectations. They don't want to have things pulled out from under them. And just with the news that just broke, we've got tariffs that are really causing uncertainty. That's just kind of compounding with what's going on here at the company. Now, if we take a quick switch over to those tariffs, Mexico and Canada happen to be the largest export markets for steel and for U.S. Steel in particular. We're talking about flat products that U.S. Steel produce. 53% of those exports go to Canada or to Mexico, and 40% of that goes to Canada. So we're talking a big majority of that export. And then we look at long product and pipe product. Canada's the largest for U.S. exports at over 55%. So we're talking big market share in terms of that. So there's really going to potentially be some weakness in that demand. So it's also when we consider how retaliatory tariffs are going to work on both sides of the border as well. All right, but let's jump into the charts because let's see here. As we've known here, the stock off its high has been retreating off it, but it's actually been able to find itself into kind of a consolidation pattern over the last little while, where the stock has been bouncing between kind of that $37 and $42 range. One of the things Hiran's talking about is head and shoulders pattern, but with the technical analysis, we want to see confirmation, validation of opinion. There's a couple things that I noticed that have happened rather recently. One of my kind of go-to patterns that I like to identify is a double top. We're looking for kind of those peaks that have been noticed on the chart. We've been able to see that recently. It's actually already been confirmed with candles, and we'll happen to see with the uptick candle that we've maybe trending off today's news, if we can still maintain that, where there is an opportunity for us to break down towards lower support. Talking about confirmation, there's been additional things that I want to highlight for everybody here. In addition to the double top, we also have we've got a bearish triangle that's happening. On that, we're seeing lower highs. We're breaking out beneath the lower edge of that triangle. But supporting that is we've got our MACD crosses that are appearing on the screen. The MACD line is crossed below the signal line. We've crossed into negative territory. We're getting down towards the time of it. The last thing I'll throw out here is we've also got a big bearish engulfing candle that's appearing on screen. You're being pretty generous.
I wasn't sure how much extra time to give you there, but that's not fair that I let Hiran go on while my brain just goes off to the news wires. All right, so we heard the bear, we've heard the bull, and little time to counter each other right now, and some fresh news into the mix that President Donald Trump says he will increase the steel and aluminum tariff that was due to come into play tomorrow from 25 to 50 as of March 12th. So some fresh news here.
That's a mic drop moment right there, if I ever heard one. But yeah. So speaking to your points, Jay, yes, fundamentally, look, they're not in the best shape, but I'm attributing a lot of that to the capex spend that they went through. Keep in mind, this is a cyclical industry at the end of it, at the end of the day. But I think they're at an inflection point where they've got this cash injection coming in from potentially, Nippon Steel, or whether that be Cleveland Cliffs or Nucor partnering up and getting into the market with them. But either way, there's also the steel market in the U.S., you have to remember, is a bit of an oligopoly because they've got this four or five big names that are really controlling that space. And for any of their sort of foreseeable, if this remains in place, the tariffs, that just means all that money is going to flow right to these domestic producers at the end of the day there. So that's what I'm going to hinge on. The other thing I will say is their balance sheet is very solid. 5.2 billion current assets, 1.4 in cash. As part of that, liability set at 3.4. So really, in terms of someone in manufacturing, like a company manufacturing, they've done really well for them. They stood the test of time. They've been established since 1901 as a business, and they've lasted more than 100 years.
So we're going to talk a little bit more about some uncertainty that's coming into, yes, the Nippon Steel situation seems to have been settled to a degree, but that hasn't stopped kind of one of their big institutional investors of calling for change corporately and within their structure. We're talking about the institutional investor Ancora, one of the wealth management firms, citing differences with the board. They're looking to kind of for wholesale changes amongst the executive group. So we'll see how that plays out. And yes, there is that bit of an oligarchy with regards to the steel makeup, the steel companies with like Nucor, and the other ones losing my
Cliffs?
Cleveland
Cliffs
Yeah.
and things like that. Well, if we're looking at how the revenues and growth of U.S. Steel is comparing, we're seeing earnings per share is decreasing. Was $1.49, which is a decrease of over 57% year over year. PE targets are slightly lower as well from the pricing.
Well, I'll tell you, PE ratio is the highest out of the steel makers, which tells me that the market is expecting growth in U.S. steel for the foreseeable 24.3x.
PE ratio is lower, but then if we look at forward-looking PEs, that's actually lower than where it's at now. So analysts aren't sharing that same value ratios that
but
investors
I think there's
are
still the
expecting.
market are looking at it. The other thing I'll say on EPS, yes, they've come out of it, but expectation going into this year, 2025, 96 cents in the EPS, which is going to be a significant turnaround from where it is currently, and that's going to buoy up the stock a little bit more. I will say also just on the inside or institutional investors, there's Massachusetts Financial Services, which now owns a 2% stake of U.S. Steel. They just increased their position by 26.5% back in November as part of their ownership. So there's some good news stories happening, which I think that institutions are buying into.
If we want to talk about good news story about revenue growth being negative, that might be an interesting way to put it. We're talking minus 50% year over year, down 3% over the last quarter. So that's a bit of a challenging.
Can we show the chart for a little second? That I've got the monthly chart pulled up here, which is like kind of the price that you want to look at. It's clearly holding above this triangle pattern right now over here. It's just broken above that 10-year resistance as well. So if we see it up there, the analyst price target somewhere in that 40 region, 43 maybe on the tops. There's a 20-25% upswing.
All right, and the stock is up a little more than 3%, of course, because as we just got into our debate, news started breaking that the White House plans to raise that aluminum and steel tariff to 50%.
We're doing this live, folks, right?
Yeah.
So
a lot of this is happening in real time. We've had the debate, we've had the counter, now 90 seconds. No, we're not going to put time on this. Why would I put time on this? I'm not paying attention to any other times. I'm in big trouble after the show. There's someone who keeps track of these things. Lay out how you possibly play your case through options.
For the options one, absolutely. So I'm just going to bring up my chart here. We'll go back to our daily time frame here, and I just wanted to point out the trade I'm going to be looking at is just a play off of the bounce of this demand zone where I've kind of identified. So you can see in this chart what we have is like this 30 to 31 region seems to be a key demand zone. It's bounced off of this level quite a few times whenever it has hit. So part of this trade would be kind of a neutral to bullish trade where we'll be looking to sell a put option. So bringing up the options chain, let's come up over here. So whenever I'm a seller of options in general, you want to look for a shorter time frame just to minimize sort of any or to maximize, I should say, time decay, which works in your favor. So the April 1s is what we're targeting. It's about 37 days out. And the strike that I identified was $33, which means the current premium, which is, we were looking for about $2 premium. So if we see a little bit of a tick down, we should get that $2 premium. So what that means is with the $2 premium, break-even price is at 31. So should the stock happen to start coming down, we would be in trouble if it breaks below 31. We would start losing money on that trade. So the risk is essentially that we're either going to get assigned because we're selling a put, so we'd have to take ownership of the shares, but we'd have to buy 100 pieces of United States Steel. But in hindsight, if you're looking to get it as an entry position, that might not be a bad thing. And worst case scenario is obviously if the stock goes to zero, then you're going to lose out $31 as your total loss on that trade.
Okay, how would you play your position there, Jay?
all right, I'm gonna take a very similar approach, but I'm gonna take the call side of this trade. I'm gonna be. I initially was thinking that we could sell just straight sell some calls, some naked or uncovered calls. But then when I kind of dug into the option chain, there wasn't enough premium on the short calls to kind of make taking naked options, that risk of it going against you and having to be short the shares to be worth it to me. So we thought the spread being a risk-defined trade would be the right way to go. And looking at the chart as well, here and identified kind of the lower band of support. I'm kind of basing my decision for strike price selection off the top band of resistance. Right around that $42 mark where the stock's kind of bounced off numerous times over the last month. And if we go kind of further back into the option chain to kind of think about price selection, one of the things I like to do first is kind of price the at-the-money straddle. We're looking at pricing the $37 straddle, so buying it at 3.25 and on the call side. And if we can get the put side around $4, it's just a little over $7 of expected move out to April 17th is kind of what I'm thinking about managing time frames, as Hiran mentioned with his trade. So that all leads me to believe, if we go down and take a look at a $42 strike as my short call, deltas on that are just over 30, so around the 70% probability of expiring out of the money. I wanted to go a little bit wider on this as well. Maybe this is just my own comfort level, usually going around $5, but if I go up to 7, I can still get a little bit more meat on the bone in this trade, so I'm getting enough premium back to offsets to make it worth my while to be in the trade. So selling 42 calls, buying 50 calls out through April 17th. It's a $7 wide risk. Let's see what the premium's at right now. Trade, I'd get in about $1. It was a little higher yesterday when I was looking at the trade, so $1.20. But still, I'm still taking in a dollar with when we think about max loss. A $7 wide spread is max loss of $7 a share, or $700 less the premium I'm taking in. So max loss would be just under $6.
All right, thank you very much for laying out the bull and bear cases, possible ways to play it through option strategies. And it was U.S. Steel. This is the first bull bear debate we've had. We're halfway through the argument. Significant news broke about the industry. So someone was thinking ahead with picking U.S. Steel for
well
this
planned.
show. Well planned indeed. Just a reminder to our viewers that this debate was for educational purposes, does not reflect our personal opinions about the stock. Now, before we move on, Jason, I think you're going to walk us through how you set up and use those MACD indicators.
Yeah, I alluded to it a little earlier, and MACD is a short form. We love our acronyms in the business here. Moving average, convergence, divergence. It's a momentum indicator. It's an oscillator that's a lower study. It helps us. It basically takes two moving averages and nets them together and plots it on a graph below your chart. There's typically two. You know what? Let's, instead of just talking about it, let's actually show it on the chart. You'll notice that I've got the MACD off at the bottom of my chart. We've got the blue line and we've got the yellow line, as well as the histogram that we'll touch on a little bit. The blue line is essentially just the difference between a shorter term average, typically 12, and the longer term average 26, and then they plot those points as they move on. The yellow line, that's often referred to as the signal line, that is an average of the moving average. The default on that is going to be 9. And the colorful kind of green and red kind of things that you're seeing, that's the histogram. That's tracking the distance between the MACD and the signal line. And so the way that people are going to be using this, they're looking for trends. They're looking to see if it's matching the kind of shape of the candles that are on the chart. But we're looking to see if the near-term prices are increasing faster than longer-term prices with the MACD line signaling up, or if it's coming down, that's telling us that longer-term prices are increasing or depreciating quicker. So the way we can use this to trade is we're looking for crossovers, like we're looking for price crossovers on your chart. The MACD crossover is something we're looking for as well. We're looking to see in which direction is the MACD line, the blue line, crossing above or crossing below. Those are going to be bullish and bearish entry and exit points that it could be deciphering for you. And then also we're looking to see if the MACD line is going to be crossing the 0 line. The last thing I want to show everybody is sometimes people will actually remove the MACD line and the signal line to make things simpler and just want to look at the histogram to see if when it's crossing above and below 0 and to track the width between those the two lines. We can do that by going up to the study settings button at the top of the page, and by when we select our MACD, if we go down and unselect our values for the individual lines and give that a close to bring back, now we've got the histogram on the chart, and they're looking for those positive to negative switches, those crossovers that could be the potential reversal points for entry and exit signals.
All right, very interesting stuff, Jason. If there's a stock at home you want to see our debaters go head-to-head on, send your suggestion to td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. If you scroll down, you're going to find a tab that says Join a Live Masterclass. This Wednesday at 2 p.m., the team is hosting an interactive session about TD Active Trader. Is that you, Jay?
That's me. That's me,
Jason. Explore all the main features of the platform with our very own Jason Nadek. Registration is required and is open now.
We're talking options in the platform and customizing it and you're really getting the most out of it, so it'll be a good class.
This is the man to come see about that class. All right, another great show, very spirited show. Before we wrap up, I mean, things are happening in real time on the show. Things are going to continue to happen. What are you keeping your eyes on for the rest of the week?
Yeah, so we talked about volatility. There's some big market-making moves happening. Inflation data doubleheader, of course, this week. So CPI is coming out tomorrow, and PPI on Thursday, of course, give us crucial inflation readings. Any surprises, of course, that's any upside surprise on core inflation could further delay rate cut expectations, and that could add more pressure to equities. With cooler than expected readings, it might revive hopes of an earlier monetary easing, and that might buoy it up as well. So that's one to keep just an eye on. The other one that I've also got a closer look at is Adobe. They're reporting earnings coming out tomorrow as well after the close. Adobe's going to be looked at very closely for insights into creative professionals and marketing technology demand. One of the things that Adobe had on the last time was the AI malaise. And what I'll say by this is there competitive moats at risk because of AI technologies, which are kind of now doing what Photoshop and Premiere and the rest of its product suite did. But one of the other analysts had noted that there was no evidence of monetization with the AI technology that they're even adopting as part of their suite. So that'll be something to look forward to. 497 is estimate on the EPS, 5.6 billion in revenue. Year-over-year growth is sitting at 11% and 9% respectively there. Looking at the charts, we look at the past two earnings, they've had big gap downs. You can see right over here, there's huge gap down on the one back in September, and the one in December was another gap down. We've seen lower highs, lower lows as well coming through, and there's a bearish flag forming. It's just broken out of that flag pattern now and breaking, and it's at this key sort of level now. So if it breaks further below, we could see it being pushed down to the 400 level. If there's a good earnings surprise, we could see it pushed back to around that 460 to 480 level. So that's one to keep an eye out, but notably, it's also clearly in a downtrend as well against the moving averages. It's already formed that death cross, so we'll see if we can revive hopes from here.
All right, Jason, you're keeping your eye on the U.S. housing market.
Yeah, taking a look at this. So since January 2025, U.S. Sales fell more than expected. While home sales saw a decline, this was impacted by raising mortgage rates, elevated home prices. Median home prices now in the U.S. are now at their highest level since October 2022. Okay, so and then when we think about new builds, tariffs is on the tip of everybody's tongue. Softwood lumber tariffs and other retaliatory measures are being considered there as well, where this could add anywhere from 4 to 6% to the cost of building a U.S. home because of potential for tariffs. So we've got a major home builders is coming up later this week. Lennar, they're the number 2 home builder behind D.R. Horton. So they're coming out on a Wednesday. They're also expected to be completing a merger or an acquisition of Rausch Coleman, which is the number 21 builder. This kind of gives us some additional kind of strength in the Southwest market, right? So, but taking a look at their chart, we can see the gains that the company had seen in their share price, throughout 2024 has actually been removed over the last number of months. The stock's down 28%. What's interesting here, though, the company has found found support around $122 and bounced back off that. So there's been some consecutive candles of strong price performance coming into earnings. So we've got that coming up. What does they say? Wednesday, so just tomorrow. Things are happening so fast. It's tough to keep the date straight. But tomorrow we'll be looking to see how Lennar is dealing with the housing market as well as potential for tariffs.
All right, we've covered a lot of ground. I'm supposed to be the time cop. I've been sliding off of that. We're running out of time. The viewer who sent in the question about how to put on a one cancel other on your position. Maybe we can talk about that next week. If I talk about it now, I'm going to get in so much trouble when I leave this room. Also want to check in on the S&P 500. Before we say goodbye, we started the show saying we didn't know if the market was sort of struggling to find a direction. Maybe these latest tariff threats out of Washington when it comes to a 50% levy on steel and aluminum out of this country kicking in tomorrow. That is a threat out of the White House right now. You have the S&P 500 down a little less than a full percent. And U.S. Steel, of course, was our stock debating today as this steel and aluminum tariff news broke. We did see a bit of a jump in the name. It's coming a bit back off of that little jump that we saw off of the news. This was an action-packed show.
This was.
My friends, I'm glad we're all here to get through it together. I couldn't think of anyone better to discuss it all with. We have run out of time, though, and then some. As always, investors should perform their own due diligence before trading. Thanks for watching. We'll see you next week.